You need to. Hello, my name is Joe Casella. I am the Camden County District Coordinator for AARP Tax Aide program. And Ellen is going to be assisting me. She's one of my counselors, but she's also the lead for ATP, the Alternative Tax Program. Okay, Ellen.
All righty. And let's see what happens. Hey.
Okay, so we're going to go over types of changes that we have. We have the federal tax changes. There are special tax laws still in effect for tax year 2022. And there's still laws that are impacting tax year 2022 returns. There's expired tax laws, there's miscellaneous updates, there's inflation adjustments, and then we'll go through the New Jersey tax law changes. The real thing is that there wasn't a lot of new changes for federal, but a lot of the COVID stuff went away. So that's the big changes that we're having in the federal. Okay, we're going to go to federal law tax changes first. Special tax laws that are still in effect for tax year 2022. Okay, the refundable child tax credit expired. So we're reverting back to the old way. And a lot of people are going to be shocked by this because during COVID, it was a very generous program. And it used to be that the child, last year they made a child was 18. That's expired. Now it's back to the child being under age 17 by the end of tax year 2022. And the initial amount of the child tax credit is $2,000 per qualifying child, including a maximum of $1,500 for each qualifying child. Used to be a maximum of $1,400, but last year I think it was $3,000 per child. So
yeah,
there's a lot of big changes in that, and people are going to be very surprised. I just hope they didn't adjust their federal withholding based on that. Okay, Ellen. Okay, the employer may pay up to $5,250 annually for employee education expenses that can be excluded from the wages. So this is evidently a new program where if your employer wants to pay for college, maybe in order to keep you at the job, that he can pay this and it won't be taxable to you as wages. So this includes tuitions, fees, books, etc. There was a special provision in the 2020 law that added student loan repayments as tax-free also. This applies to payments made from 3/27/20. Sorry about that. And repayments as and through 12/31/25, which is when the new changes are supposed to come about. The big thing about this is the taxpayer cannot claim the education credit for expenses paid by the employer. Okay, so it won't show up in your wages, but you won't be able to get a you won't be able to get credit for it.
you need to take that call, Joe.
No, that's all right. I will. It'll go to my voicemail, I hope. Okay. Form 1099-K payment card and third-party network transactions. This is actually going to be a very big deal. Luckily, IRS has postponed it till 2023. But the way it reads is that for whom they process, anybody that processes more than $600 in reportable payment transactions would have to send a 1099-K out. This includes stuff like Venmo, PayPal, Cash Apps, Uber, Lyft, eBay, and even Airbnb. Now, even though they may not be taxable, and I guess this is what IRS has to figure out, they're going to get a 1099-K. If anybody receives a 1099-K from a company, you have to file that with IRS somehow. So hopefully IRS is going to have a whole bunch of changes for us next year that are going to make it much easier. That's why they postponed it this year. So you're going to have more gig workers. We'll see Form 1099-Ks next year. This year, I should say, in 2023. Okay, Ellen. Okay, so I see later slide for earned income provisions that have expired. That was another big thing that we had. Taxpayers and spouse with valid Social Security numbers can claim earned income credit even if children don't have Social Security numbers. You would get a smaller credit available to people without qualifying children. And in the past, you did not have to qualify for earned income at all. Starting in tax year 2021, The limit on investment income increased to $10,000 and is indexed for inflation. I don't think many of our clients have to worry about that. The limit now is $10,300 for tax year 2022. If filing married, filing separate, taxpayer can claim earned income credit under certain circumstances. Married filing separate filers were not eligible for earned income credit in the past. Starting in tax year 2020, age cap on traditional IRA contributions was removed. Taxpayers can now make a deductible contribution at any age as long as they have taxable compensation. So it used to be, I believe it was 70. Once you turn 70, you couldn't make IRA contributions.
Correct.
Now, if you're working, you can do it, but it's got to be earned income. The age to begin the quality charity deductions from traditional IRAs directly to a charity remains at 70 and a half. So the way that works, if somebody has a lot of money, I guess, in their RMDs, they require minimum distribution, and the way of getting it, or the way of making it non-taxable, is to do a charity deduction to a church or something like that, and you can do that, and that way it wouldn't become taxable. Let's see. Excludable amount of QCD must be reduced by cumulative amount of deductible IRA contributions made after 7.5. So if you make deductible IRA contributions, then the QCD that you can take would be reduced.
Okay.
Okay, federal tax law changes. These are expired tax laws. The emergency rental assistance is gone. This is a big one too. The private mortgage insurance, PMI, that interest deduction was on a Schedule A. That's been it's been in for the last couple of years because they put it in at the last minute. Now they're not gonna, it hasn't been taken on for this year. Charitable contributions, the last, I think, 2 years, we had a temporary deduction for taxpayers who didn't itemize. That is gone now. So now you have to itemize in order to get charitable deductions. The economic impact payments, that was the 3 that we got. There were recovery rebate credits. They're also gone now. Sick and family leave credits for self-employed taxpayers expired on 9/30/21. Refundable child tax credit, it was expanded. No longer any advanced child tax credit payments are sent out. That's when the people used to get monthly payments for their child tax credit. That's gone now. The child independent care credit, the refundability of the credit goes back to non-refundable. What that means is that if you don't have a tax liability, then you can't get the credit. Increased amount of credit and eligible expenses, modified phase-out limits of credit for higher earners. You have the special premium tax credit. That's when you have Obamacare. The provision for taxpayers who receive unemployment for any week in 2021. These are all expired. Certain earned income credit enhancements from tax year 2021. Tax year 2021 had higher income limits and credit amounts for taxpayers with no qualifying children. The ability to figure out credit based on 2019's earned income is gone. And the elimination of upper age limit for taxpayers with no qualifying child. So what that used to be is last year, I guess the year before too, you could be over 65 and not have children, but you would qualify for the earned income credit. That reverts back to 64. But I believe in New Jersey, it's still, you can still do it at 65. So we'll probably go over that. And then you have the elimination of minimum age of 19 and 18 for qualified homeless youth and qualified former foster youth for taxpayers with no qualifying children. So it reverts back to the minimum age of 25. That's what it was before. It was 25 before, and now it's, it used to be 25. Then during COVID, it went to 19 and 18, and now it's back to 25 again. These are miscellaneous updates for the federal tax law changes. Qualifying widow and widower filing status renamed. Now it is called qualifying surviving spouse.
Took them long enough to get there.
Yeah, that's true. Tax returns. Okay, so Tuesday, April 18th is the last date. If you do estimated taxes, the dates that you have to put in your estimates are April 17th, June 15th, September 15th, and January 16th of 2024. Inflation adjustments. Every year they always get adjusted for inflations. It's not real big, but so the standard deduction increased to 25,900 for married filing joint and qualified surviving spouse. It's an increase of $800. Head of household went up to 19,400. That was an increase of $600. And single went up to 12,950, which is an increase of $400. Additional standard deduction amount for age 65 and older and or blind increased. 1,750 for single and head of household, increase of $50, and 1,400 for married filing joint, married filing separate, or quality. Surviving spouse, and that is an increase of $50. Dependent standard deduction is the greater of 1,150, which is an increase of $50, or earned income plus $400, which is an increase of $50, not to exceed the standard deduction for filing status. They also changed the mileage price, so that's going to be a lot of fun this year. So in tax year 2022, the standard mileage rates for the first 6 months, it's 58.5 cents. For the final 6 months, it's 62.5 cents. So that means anybody does Uber, Lyft, and all that stuff, they have to have them breaking out by January through June and July through December, because there'll be different prices on it. The medical mileage also went up, but it's also changed. The first 6 months is 18 cents, and the final 6 months is 22 cents. They kept charitable mileage the same, 14 cents all year. Okay, the New Jersey tax laws. There was quite a few changes in this, which was surprising.
Mm-hmm.
So now you have New Jersey child tax credit. It's a refundable credit. The eligibility rules: you have to be a New Jersey resident for all or part of tax year 2022. You must have a valid Social Security number. Your taxable income of 80,000 or less. Claiming a child age 5 or younger by the end of the tax year as a dependent, and you cannot be married filing separately. So that's only if you have a child under 5. Okay, and these are the taxable income ranges, and credit amounts are the same regardless of filing status. So the amount of the credit per child, 30,000 or less, it's 500. Then it goes down to 400 if you got up to 40,000, 300 for up to 50, 200 for up to 60, and 100 for up to 80. And then after that, there is no credit. 3 new income tax deductions for taxpayers with gross income of 200,000 or less for all filing statuses. These are new, and these are pretty interesting for people that have kids going to college. So you can deduct up to $10,000 per year of contributions made into the New Jersey Better Education Savings Trust. It's called NJ Best. I think it's basically the 529 college savings plan, but you would get, I believe, a 1098 with New Jersey Best on it. You can also deduct up to $2,500 of principal and interest paid on student loans under the New Jersey College Loans to Assist State Students, and that's the NJ Class Program. This last one is a very interesting one. You can deduct up to $10,000 of tuition paid to an in-state higher learning institution for enrollment or attendance, collectively for taxpayer, spouse, and or dependents, but it's a $10,000 limit per return, not per person. So what that means is if you have a child going to college in New Jersey, it doesn't have to be a New Jersey State college. It can be just as long as it's located in New Jersey, you can deduct up to $10,000 of tuition paid. And that can be a nice little chunk of change. I guess if you were 2% tax back, it would be $200. If your tax a little higher, it would be even more.
Joe, when it says in-state, does that mean they have a brick and mortar location
Yes,
rather than
absolutely.
going to Phoenix or any of those guys, the
That
online
is correct.
stuff?
It has to be a brick and mortar in the state of New Jersey. Okay, tax year 2022, federal rules reverted to age eligibility of 25 to 64 for taxpayers with no qualifying children for earned income, but the New Jersey rule remains the same. So at age 18 and older with no maximum age limit, it's the same rule as New Jersey as in 2021. The only thing is you can't be a dependent. So for a taxpayer who doesn't meet the federal EIC age requirements, but does meet the New Jersey age requirements, New Jersey EITC will be calculated based on 40% of the maximum federal EIC for a taxpayer with no qualifying children. So it would be for New Jersey earned income tax credit, it would be $224 for tax year 2022. So that means that even though you can't qualify for the federal earned income tax credit, you can qualify for New Jersey.
Wow.
Which is pretty nice. Compensation paid for services by an election poll worker is exempt from New Jersey income tax. That's new. You used to always have to report that. Not reportable on New Jersey beginning in tax year 2022. It was taxed by New Jersey in previous years. And it's still taxable in the federal returns, of course. Federal tax is almost everything. New charitable funds. So they always have a bunch of charities down the bottom of the last page of the tax return in New Jersey. So they have added the Special Olympics New Jersey Fund and the New Jersey Pediatric Cancer Research Fund. Taxpayers can give a portion of their refund or enclose a contribution with a paper return.
Joe, I just want to put in a plug right now that there is also, I just found out the other day, one of the charities that's on there is for your local library.
Ah, there you go.
Yes, you can make, yes, and the monies go into a fund for all the independent libraries in the state of New Jersey.
Okay, that's great. Okay, the New Jersey Anchor Program. I'm sure everybody's been inundated with this. They actually started sending out the old green forms, I think in September. Okay, and I guess what makes it difficult is it's actually for year 2019. So it's for residents who either rented or the principal residence was in New Jersey on October 1st of 2019. It's the old homestead benefit program. So, and the old homestead benefit program didn't really include renters. So the eligibility is homeowners with gross incomes of $150,000 or less will receive $1,500. Homeowners with gross incomes more than 150 and up to 250 will receive $1,000. And renters with gross income of $150,000 or less will receive $450. Now,
Wow.
the interesting, yeah, it's pretty good. The interesting thing about this is the old homestead rebate used to go back to the municipalities because originally people were getting checks and the municipalities were complaining that they were getting checks for taxes they didn't pay. So they had changed it. And now with this new anchor program, it's back to going back to the taxpayer. I'm sure that unfortunately, the boroughs are going to be very unhappy about this because this is a big chunk, this 1,500. I don't think I never got a homestead rebate that high. So the thing with this though is if anybody hasn't filed it, you can still file it by February 28th. So it's still out there. If you go into New Jersey, oh, here it is. Okay, how to apply. So homeowners, there's an online by phone or upload or mail a paper application and necessary attachments using New Jersey electronic filing system. I have talked to people who have actually done this on the phone and had no problem. They said the people were very helpful. Tenants, the same thing. You can online or upload. I think the big thing you got to know is your 2019 line 29, your taxable income. That seems to be the one thing that they're really looking at. And I guess that's just to determine how much they're going to give you if you get something.
You say it got extended till now the end of
February
February?
28th, February 28th.
Okay, I'm sorry, I didn't catch that.
No, it's all right. They just really did it just not too long ago. See, they extended it to January 31st, and then just recently they extended it again. So, and that's the thing, the payments are going by check or direct deposit. They are not credits on the property tax. And beginning in late spring 2023 and no later than May 2023 is when the checks will come out. So it's a really big deal. I really think that probably over the last 5 years, New Jersey has done a lot to try to keep people here once they retire. It used to be a really big problem with property taxes and stuff like that, and the pensions being taxed, and now they've kind of whittled that all down, and it's really not that bad, especially if you're in South Jersey. North Jersey is a little worse, but
Okay.
okay. Is this going to be you?
Mm-hmm.
Okay.
Okay. In Pennsauken, we have a couple of ways of taxpayers getting their taxes prepared. And this is what I'm going to be talking about, the service delivery models that we have available. One is that the old traditional tax return preparation policy, a preparation plan. We recommend that people make appointments, that the appointments will be available online. You can also go into the Pennsauken Library. They have a separate computer set up station so that people can make appointments. You do not have to have an email address. You just need to be able to have access to a computer. This year, for the first time in 3 years, there will be a limited number of walk-ins accepted. That means showing up about 10:30 in the morning and seeing if there are slots available. No appointments can be made for that. We do ask that whether you have an appointment or you don't have an appointment, that you complete all the forms in advance of your appointment. The forms that are required are available at the library. For those people that have provided an email address, the forms will be emailed to them. When coming to the site, you will need to bring a copy of your 2021 and 2020 tax returns and all your 2022 tax documents. So basically, that's 3 years worth of tax information. Also bring any IRS letters that have been received over the summer, weren't sure what to do with them, bring those to the site. If you're missing a document, a W-2, a pension statement, a stockbroker statement, please cancel your appointment and reschedule. We would like to have people come in, get their taxes prepared, get the quality review, and leave all in one day. We do not want people to have to come back. The
Ellen, can I
interviews,
jump in a second there?
sure.
Okay, so when Ellen talks about all the tax documents, we talked about that 1099-K. Well, IRS did that change in December. So there could be actually companies that have already changed their software. So people could be getting those 1099-Ks. So if you do get them, it is very important to bring them in with all your other tax documents. Okay, Ellen.
Okay. When you do come into the to the site, you would be interviewed by an IRS certified tax aide counselor. If it is a married filing joint couple, we need to have both parties present, or at least the photo ID, Social Security card, realizing that sometimes only one member can make it in because the other one is working. After you have sat with the counselor and they prepared the taxes, you'll then see another person who is also a certified counselor who does a quality review to make sure that all the information is entered correctly and that you understand that the responsibility of the correctness of the return is your responsibility. We then give you a copy of your tax return and hope that you get your tax return processed quickly. Unfortunately, we have no control over that. We email them to the IRS, and if you do have a question of what's going on with your tax return, you can contact us. We will look up on the IRS Where's My Refund, and see if we can help you out there. But we do not keep anything. Everything is electronically transmitted. You get all your paperwork back.
And also the clients can go on the IRS website, Where's My Refund also,
True.
if they have a computer.
Okay. Even though I said we are a traditional site, by AARP Tax Aide site here at the library, there are some things that we cannot do. They're restricted. We refer to them as being out of scope, and that's based on, this is for the state of New Jersey. Other states have other items that may be out of scope. For us, the things like online businesses, those kinds of things, that might be an out of scope one, but the typical Lyft, Uber, DoorDash, etc., they are in scope. Sometimes a very lengthy stock brokerage statement, especially like with day traders, that would be considered out of scope. We would ask that if a person needed an amended return or a prior year return, we have people who come and say, well, I didn't get it done last year, so I have both my, my 21 and 22, and they want to do it all in one appointment. Unfortunately, we can't do that. They would need another appointment for a prior year return. And as you noted here, only one tax return will be prepared per appointment. So if somebody has a college student who would like to also have their tax return prepared, they would need to have 2 appointments. Okay, there's another way to get one's taxes prepared, and that is basically do it yourself. There is a program that started a few years ago at the beginning, in fact, of the pandemic, called the Alternative Tax Preparation Model. It is a statewide program. It's a virtual program for taxpayers who find it difficult to get to a site, for travel issues or timing issues. It just doesn't work for them. As long as they have access to a reliable internet connection. By the way, with the Pennsauken Library, one can borrow a hotspot to give you your reliable internet connection. You would need to have a computing device, whether it's a laptop, desktop, tablet, smartphone. Yes, we have people that do their tax returns on a smartphone, as long as there's a camera and a microphone. The people who best fit as far as ATP is concerned are people who are technology savvy, who can follow instructions to prepare their own tax returns, but they have assistance with, either they can do it themselves or they have assistance with a family member or a friend, somebody that they trust. The other issue is, of course, is that we the tax prep folks are not seeing the tax papers, the tax documents. So the kind of returns that can be done, if you will, virtually are the non-complex tax returns. I'll go into that a little bit later, but this is kind of the general overview of the kinds of tax returns we can help with. The other interesting aspect of this particular service model is that if the taxpayer's adjusted gross income is $73,000 or less, it is a free return. If their gross income is over $73,000, then it becomes a paid return. And that we have no control over that. That paid return is not that our service is still free, but the vendor requires to be paid. We have a couple of options for people for the paid returns. There's one that people can get for like about $10. Sometimes their pricing varies from day to day. So it could be as little as $10, or it could be $60 depending on how complex the return is. But it is free if the adjusted income is less than $73,000. Okay, how do people find out about this or get into it? There is an AARP Tax Aide page that person can click on, and request assistance with preparing their own tax return. There's a couple options when that comes up, and I'm not going to demonstrate it here, but you have a choice of request help. You fill out a form, and that sends the request to the ATP state lead. In the case of New Jersey, that's me. When I get the request is handed off to what we refer to as a screener. The first person who calls will be doing like an interview. So if anybody had ever come to a site, there is an interview process before we even start the tax return to make sure that something that is within scope. So the screener asks questions, and they also ask questions about your computing device, your browser, just to make sure that the tax software that we have available to us can run on your computing device. Okay, the next contact they would have is like the tax aid counselor. Most of the people who are tax aid, that are ATP counselors virtually also work at site, like myself. I work in Saucon for 2 days a week, and the rest of the time I'm doing things virtually. So the assister is available for a person who is using any kind of software really, and they get stuck. I have a question. I don't know what I'm supposed to do with this 1099. So we can either just answer a question, or we can help somebody all the way through the entire tax preparation process. Generally, the best way to do this is to have a video meeting. And for ATP, we use Google Meet. We cannot use Zoom. We use Google Meet. Or for those people that do not have a camera, or they don't want to have don't want to show their document on the screen, or the tax return on the screen, Google Voice can be used to guide the taxpayer through the tax prep process. So the taxpayer is actually the one who is entering the information into the software. It's the same software that's used by the tax aid sites, and they are filling in the blanks, not a tax aid counselor. At the completion of the process, the taxpayer files their own tax return electronically directly to the IRS and the state of New Jersey. But if they have any questions after they have filed it, they get a letter, or a notification that that which was filed was rejected. The ATP assister is available to get a hold of and saying, what happened, and we will definitely, work with the person to make sure that all their questions are answered. So the problem, of course, is that since we are not preparing the tax return ourselves, we have no paper. So the taxpayer, must either print it out if they have the ability to do so, or save the document as a PDF, because it is not saved by the vendor. So the only way you can have your record of your tax return is to have it printed out or saved, because the IRS does not have your tax return to send you. Okay, so what is out of scope for ATP? Generally, the gig workers, because again, we do not see the documents. We are just depending on somebody else's. They're putting the information in correctly, and it's just much more difficult to make sure that it is being done correctly. So generally, Uber, Lyft folks are not good candidates for ATP. The complex or very lengthy stock brokerage statements. If somebody's got a lengthy statement, they probably are not that familiar with all the ins and outs of the brokerage statement, and we're not we're not teaching somebody how to read a statement. If a person is not comfortable with reading it, they are probably a better candidate for the site. The other things ATP do not do is amended returns, because the vendor charges for that, and the same thing with prior year returns. The software vendor also charges for that. So guess at this point, any questions? And we have one person online and muted. Any? For the person who, if you want to have something to say, if you would unmute yourself, I'd be happy to hear from you.
I just wanted to thank you for all the information that you guys gave tonight.
Well, we appreciate you logging in, and hopefully some of that has some, not only some value for you, but then you can also share some of the things you've learned with others too.
Exactly.
And can I make a statement too? I just want everybody to realize that whether you use the AARP tax people at the libraries or you use the ATP, that we are all volunteers. And, you know, we will do our best, but the bottom line really is that the taxpayer is responsible for their own returns, regardless of who does them. Okay, so that's really important. And we emphasize that when we're going over the returns with the clients. We tell them that, you know, we put down all the information they've given us and that, you know, they are responsible for the return. Because all we are is really a, you know, a connector with IRS to put the information into the system and send it off. But we would also, this year especially, appreciate patience, because this is going to be a really weird year for us. It's our first year back doing in person. And unfortunately, there's still a lot of disease out there. And there is a possibility that we could wind up being short counselors if somebody comes down with COVID. So, you know, we will do our best, but can't make any guarantees.
Well, I think your service is definitely appreciated.
And we all enjoy it, believe it or not. We must be tax geeks, I guess.